Hey traders, it's Nathan at MarketFi. Today's a day that I've been very excited for a long while now, and I know that many of you in our audience have been looking forward to this as well. We have a very special presentation from Zach Musso of the Lucci Trading Group, and he'll be walking us through a live trading review. My name is Nathan, and I'm on the team here at MarketFi.com. MarketFi.com is, of course, the web's only marketplace where you can shop for fully verified, fully audited trading courses and newsletters. But back to today's presentation. Lucci needs no introduction, but I'll give one anyways, just in case. They're a fast-growing hedge fund comprised of serious options traders, and they're also internationally renowned trading instructors and speakers. If there's one thing about the guys at Lucci, they're brash, and these webinars sometimes include some colorful language. So even though it's summertime, you may consider putting some earmuffs on the kiddos. This afternoon we have with us Zach Musso from the Lucci team. He's the young buck, as he's known. He is the brains behind the On the Move course. On the Move, of course, is a course for people who are trading options on the go, want to learn how to trade options while they're juggling busy lives elsewhere too. Zach, you've learned under the tutelage of the entire Lucci team, and we're all excited to hear what you have to say. How you doing today, Zach?
What's going on, guys? How we doing? It's Young Buck. Nate, thank you for the intro. Appreciate it, my man. Doing well, though. Doing very well. It's the first day back trading this week. I've been moving out of the city, and I'm back at home now, so it's been very good. But just to sort of discuss a little bit about Lucci and the crew, I'm the only one on today. The three guys that you see in front of you, Pete, Anand, and Charlie, are actually in Vail, Colorado, enjoying a much-needed vacation, getting some work done out there. So I am the only person that's on this with Nate, and I was working with them this summer and have been contributing over at the Lucci blog, as some of you may know, since October of 2012. So the neat thing about Lucci, again, Nathan kind of touched on it, but just to reiterate, they're the options guys. These guys are the people that trade weeklies, trade monthlies. They can trade anything options, and they're very, very good at it. And their main focus is on the tape reading technique and understanding market structure as well as they do. And another thing that that we've concentrated on a lot this summer, and that we will continue to be concentrating on, is trading psychology. Trading, I love to throw around the phrase, once you get, all of the skill set that's necessary, trading is 80% psychology, and the rest is, what you need to know and what you do and the motions that you go about. A lot of trading is just psychology and understanding yourself and understanding, your other participants. And, Lucci understands that very, very well. The team understands that very, very well. So, again, we don't just excel as traders. We're mentors. Lucci was like that older cousin I wish I had as one of our chat room members. I don't know, Boxing, if Boxing's in here, but, he gave us this very, very good review. And it's literally all about how, he wishes he had someone that could, walk him through it, and at a younger age, and someone that was there around the house all the time, that was in the industry, and Lucci sort of fulfilled that spot for him. So again, we don't, Lucci's not just a trader. We're not just traders. Pete's not just a trader. I'm not just a trader. We're here to help as well. We're the mentor types, and we're trying to help you as much as possible. So today we're going to be discussing a little bit about what we give off in the course. So this is one of the supplementary information pieces that is in the course. It's very neat. Today was one day where this is I was very lucky to have the day that I had today with regard to actually getting a setup that's a pretty good example, but also had some errors that we can go over as well. And that example is Citi. So why was I watching Citi is something that we'll discuss today. What the SPY was doing throughout my trading, and why my trading, like I said, was both an example of a good trade, and had some errors with it as well. It was an example of a trade that could have had some improvements. So this is kind of a lead-in to what I was getting at with boxing. Give a man a fish, feed him for a day. Teach a man to fish, feed him for a lifetime. So we're not here to give you trade alerts. We're not here to give you exact prices to get in and exact prices to get out. We're trying to build that skill set. We're trying to give you a foundation, whether it be with the On the Move Options Trading course or even the 12-day course. For this particular webinar, we're going to be discussing, the things that we go over in the On the Move Options Trading course. But again, if you feel as though, we've taught you, we taught you how to fish, and you feel that, we've been able to feed you for a lifetime, there's always that 12th day as well, and that's the advanced course that we go through. But before we get into all of that, let's actually get into the nitty-gritty of the webinar itself. So in front of you is Thinkorswim. This is the platform that I use, and today's overview is going to be taking a look at Citi. So we start from a top-down approach every time we do a trade review. Okay, so we'll look at 3 time frames. We'll look at the daily time frame, the 15-minute time frame, and the 1-minute time frame. So if I were to take these lines away, and again, if you have questions, feel free to ask them throughout the webinar. But if I were to take these lines away, what are some levels that, just by looking at this chart, we should be paying attention to over the last, couple weeks? That 51 to 53 range is fairly important, and we've been kind of threatening that breakdown a little bit, as has the market. When we take a look at the SPY chart in a little bit, we can see the exact same thing. So today, if we take a look, we're starting to hold a little lower. Instead of that 53, we're actually starting to hold that 52 level spot. So I'm going to put those drawings back on, and if we take now a look at the 15-minute, before we get into the market profile, let's just take a look at the chart itself. We've been very choppy for the last week and a day. Since that major drop-off about a week ago, the market hasn't really done much, and because the financials are a very large part of how the market moves, the financials in turn have not done much. A lot of shaky movement and a lot of movement that could cause a lot of people some frustration because they can't get their timing right. So if we're going over what we saw over the last week, the main thing would be chop. But today was a pretty good way to that might be able to position yourself short, and let's go over why. Okay, so if we take a look at this 1-minute chart, and we'll throw up the market profile on it. Now, this is one technique that we teach because you are on the move. You might not have time to read the tape, and the thing that you see in front of you, this histogram that looks very similar to a little bit of a bell curve, is what we call a volume profile. And this is something that we teach in the course, is the visual representation of time and sales. This is very important to look at, especially if you're really trying to get to that level where you can read the tape and you have the time to read the tape. When you don't, this is a great way to kind of refresh yourself on where the transactions were. So instead of looking at a chart, if I were to take this off, instead of looking at a chart, volume over time. So we can see this from 9:30 to 4, a little bit during pre-market, a little bit after hours. If we were to put that profile back up, we would actually be looking at it from a volume over price. And again, this is the time and sales. This is what you would see if you were reading the tape. So if we take a look at what happened today, again, this is the 1-minute chart of just today's session. We pushed a little high, we pushed higher, and it looked actually very promising for a potential move higher. But if we take a look at the SPY, which again we will in a little bit, we're running into a very important resistance level that we've been running into over the last couple of days. So why I say this may be today may have been a very good opportunity to look at this from a short standpoint. I was looking at it just from a short-term intraday type thing. But as we ended on lows, this might not be a bad look over the next couple of days to potentially continue to hold this 52 level that I discussed when we looked at our first top-down approach on the daily chart. So the main thing that we want to cover is what we saw from a technical perspective, and then where we lined up from the actual executions that took place today. Who was buying, who was selling, what were we taking a look at. So if we just look at it from the first half hour of the market, so from 9:30 to 10 o'clock, and I'll highlight this. This is from this point here on. We see that there were sellers in the market. And how am I seeing that? Well, we had what we call a lower high. So we initiated a high at this 52.30 level, and then we had a lower high. Established itself at around this 52.25 level. 5 cents lower, not that big of a deal. But then we actually saw some selling really gain a hold of the market. Supply overrode demand, and we continued to see that stair-step movement all the way into the 51.70 region. Okay, so if we were to take a look and compare this to what we saw on the SPY today, all right, if we took a look, we'll get this chart up, make it look nice. If we took a look at what we saw on the SPY, our first area of a lot of transactions, we have that nice push higher, and we make some new lows. this higher low, or I'm sorry, this lower high that we see here lines up almost identically with Citibanks, or Citigroups, mind you. So we continue to see the market do the exact same thing the financials did and end on lows. We also saw a lot of volume come in towards the end of the day. But what do we see here that kind of gives us a clue that we could continue to head lower? So there's something in the market profile technique called a balance area, okay? And this is what we, this is what we refer to as an area of balance. And why do we refer to it as that? Well, there are a lot of transactions occurring in this first spot here. So from 169.40 all the way to 169.70. Doesn't seem like a big deal because it's a 30-cent range. And really today doesn't seem like it's a big deal because it's only a dollar range. However, if we take a look at where most of these transactions came in, we can see that when we broke lower, there was some buying here, pushed the price higher. And then we see those transactions, that initial balance area. We see, buyers come into the market and sellers not let this point, regain itself and continue to sell lower. The purple line that you see here is a point of control, okay? And without teaching too much, this is just the main volume place. This is the price that most volume was done at for this intraday session. And again, like I said, without teaching a little bit too much, I like to give away way too much because I enjoy teaching about this stuff because it's interesting. But again, you want to look at where this area came in and what the price did at the end of the day in comparison to where that point of control was. We ended below it, and a lot of the volume took place towards the end of the day at that particular level. These are all things that could be bearish. That point to a little bit of a bearish, bearish tone in the market. So if we were to take a look, go back to Citigroup and take a look at what we saw throughout that day in comparison to the SPY. I'll bring up another chart so we can actually see them side by side. On the top is the SPY, 1 minute, and on the bottom is the Citigroup, 1 minute. Okay? What do we notice from these charts that look fairly identical? Well, the charts look fairly identical. So what we noticed here is we noticed that that 10 o'clock spot that I was talking about lines up very, very nicely with Citigroups. And why am I talking about this? Why does this make such an impact? Why do I keep reiterating myself here? Citigroup is what we like to call a market stock. And market stocks move with the market. That's why we refer to them as a market stock. So when there aren't many stocks that are moving off of news or moving off of general volatility, if you're not comfortable with taking on Apple that has been moving max average true range every single day since Carl Icahn decided to tweet about it, or if you're not comfortable with Tesla's wicked volatility, the thing is going all over the place every single day, you could take on a market stock. And look at the financials and look at these big tech names: Microsoft, Citigroup, J.P. Morgan, even Cisco. They just reported earnings after hours. If you take a look at what we see here, these charts look very, very similar to each other. And sometimes, like today, for instance, you'll get Citigroup to track the SPY very, very nicely. And as the SPY moves down $1, we see Citigroup making a move lower as well. And if we go back and take a look at that top-down approach, as I said, this may be the start of something, whether it be, moving towards that $51 spot again, or just trading within this range that we've seen, but trading a little bit tighter. Today's session may be something to take a look at, where sellers may have had the upper hand. I saw a lot on my Twitter stream today, which I utilize as a news aggregator for the most part. I saw a lot of people say this was an up-in-the-air day. We were fighting back and forth. There wasn't much of an edge. And I do agree with them. There really wasn't much of an edge. We had a fairly balanced day. But if you were to be able to see these transactions, visualize what we were seeing on the time and sales, you would have been able to gain a little bit of a sentiment and a little bit of an edge around this breakdown and say, I think sellers kind of have an upper hand here. We're not getting above this, 10-cent range. I think we may rotate lower. And that's exactly what we did. So let's take a look at this, the yearly chart on the SPY and see where we're at, with the outsized move to the downside, the Citigroup. We had it broke above 52, kind of faked some people out, and now it looks as though it could rotate lower. The SPY looks the exact same. We've been trading in this 170 to 168 range for, I would say, about a month, not counting this, little fake out here in this 170 to 171 range. We've been trading in this range for quite some time. So it may be time going into options expiration on Friday that we may be able to take advantage of a potential breakdown, below 168, or at the very minimum, a test of that level again. So this is kind of what we go over. This is something that we'll continue to review almost every single night, unless I'm traveling like last evening, then it'll be something that's written. But these are the ways that we, cover all of our reviews. We'll break down a stock, we'll compare it to the market, we'll see what's going on, where the transactions took place. This is also pretty helpful even for people that do use tape reading. So I use tape reading. What you see on this bottom right spot here is a time and sales that is asleep because we're after hours. But again, time and sales is level 2. I use tape reading as a primary skill, but as a backup, so I can actually look over multiple days. If we go to this 15-minute chart and put up, the market profiling, we can see, for the most part, the transactions that occurred on a lot of these days, and we can see the various areas of balance, and we can see the various points of control day to day, and that's helpful in getting engaging sentiment. The market, like I said, with regard to psychology, 80% is psychology, and sometimes it doesn't just deal with controlling your emotions or the psychology of you. It also deals with understanding the psychology of other people and how other people trade. So this is a great way to review the tape instead of going back and chewing through days and days of just transactions and looking for these big transactions. This is a visual interpretation of those transactions actually going off. So when we see 2 days in a row that have put up a lot of volume in this 52 area, and we end on lows, that normally, typically, I'm not going to say every time because sometimes it doesn't work out, but typically this is what you would see to start building a potential rotation lower, whether it be to 51 or maybe it breaks down. And again, if we go back to the SPY, whether it be whether we're rotating all the way to 15-minute chart here, whether we're rotating all the way, to 168, or we're actually going to make that breakdown happen this time. So again, we've been trading in this range. It's frustrating so many people. Look at how many days we've seen where it's rotated lower and then ended back up. Completely filled it. Rotated lower, ended back up. We saw it yesterday. We saw it Friday. We saw it last Thursday. We've seen multiple days like this in between this 168, 170, and it's frustrating so many people. So people are now thinking to themselves, I just want to get out. This is too frustrating for me. I'm just going to wait. Today may have been your day that if you were patient and you were paying attention to what the transactions were telling you, you were paying attention where the resistance was, and you were paying attention to what sectors track the market closely, you would have gained that edge over the last couple days to say to yourself, this may be an opportune time for me to engage in a potential short, whether it be only to 168 to SPY, 51 on Citi, whatever market stock you're watching, whether it be just that level or if we're actually going to see a breakdown below it. So no use of Greeks. That was a question that came out. No, actually, this is something that I don't use Greeks. I know Lucci doesn't use Greeks. We are hand traders. So when I say hand traders, I mean that we are doing it 100% with our hands. There's no automation. Greeks can sometimes get very confusing, and to use options as a directional trade, you can do that. Your timing just has to be very, very good. So do we use Greeks? Not really. We understand them. We understand the concept of what they are. We understand how to utilize them. We just don't use them because we trade them as though, we trade options as though they were stock. So we try to get the best risk-reward opportunities on our side, and we watch the tape, or in this case, we'll pay attention to the market profile over a multi-day time frame, and we'll try to catch either intraday moves or swing moves, to continue gaining a potential profit off of those positions. And the one thing, because we don't use Greeks, the one thing that we want to do is we want to pay attention to controlling our risk. It's very, very important. So that, again, just
Thanks, Zach.
thank
Can I
you.
interrupt real
Appreciate
quick?
it. So,
Interrupt real quick.
yeah, go ahead.
Yeah, I want to invite everyone, because those questions are starting to flow in. You can use your GoToWebinar chat box to write your questions in, and we'll make sure they get to Zach, they get to Young Buck, and we'll make sure to answer as many as we can before the time is over. So just go to that GoToWebinar chat box, and they will reach us, and we'll get those questions, and we'll make sure that we get those questions to Young Buck. All right, go for it.
Awesome, thank you. So again, these are things that we cover in the course. All of this is something that we've worked on throughout the summer to really build something that's good. So with regard to the course itself, what do we get? What do you get for a one-time $150 payment? There are 6 40-minute educational videos, 2 of which cover just the basics of options, 2 of which cover on-the-move strategies and on-the-move basics, sector rotation analysis, understanding broad market internals, which is something that we kind of covered today with looking at the SPY in comparison to what stocks are doing. And we also teach an entire 40-minute segment on market profiling itself and the subset of volume profiling. So at the end of these 40-minute videos, you'll have quizzes to kind of test your comprehension. We'll look over the answers, make sure people are really getting it. If they're not, we cover it. We go down to the last bullet point in the bi-weekly Google Plus Hangout sessions. You get to ask questions to the team. You get to connect with other traders. We've built an entire community around this Google Plus, this Google Plus community for the most part. And one thing that we do is we review on-the-move trading setups like we have today. So these updates are almost every single day. A weekly review email. I'll give you a sneak peek just because I can. The weekly review email covers is pretty intense. It's pretty neat. So I go for about 3 to 4 hours every single Sunday and chew through a variety of different stocks. And each week, I will update people that are in the course with a total economic calendar highlighting the United States stuff. I'll give them earnings that are coming up Monday through Friday, and the thing that I work on the most, the moose list, if you will. The one thing that I work on here is actually finding these setups through a criteria, a pre-screen criteria of stocks that could move, have the potential to move, and are your best probabilities going into the week based on what they did last week. And I'll normally send this out every Wednesday as well, updated version of what we've seen throughout the week. So again, this has just news when earnings is coming out. And of course, it's all from the Benzinga Pro news aggregator, which is fantastic. So again, most of this is from FinViz, and how we do it is just a pre-screen of things that we look at, that we pay attention to throughout the week, and the best criteria to look for stocks that could really give you the best bang for your buck. Again, with regard to other stuff you get in the course for $150, you get a 1-month free access to Lucci chat room, private Twitter feed. You get to trade alongside the entire team and the traders that are in that chat room. So that's what you get. I mean, it's pretty straightforward. The 6 40-minute videos, because you guys are on the move, are all recorded. It's not a live classroom setting. The live classroom setting comes every other week with these bi-weekly Google Plus Hangout sessions. And again, you have full access to us at all times. Zach at sanglucci.com, Peter at sanglucci.com, Charlie at sanglucci.com, Lucci at sanglucci.com. You have access to us all the time. I'm not going to go through these. You can read them on your own, but these are the testimonials that we'll put up from students that are currently in the course. And they've found a lot of success in understanding the concepts that we teach and putting them to work with their own strategies. So let's get to these questions. I know some of you guys are dying to ask some of them, but Nate, do you have any questions for me?
We do, and before we get to them, there's one question that I can answer, Young Buck, and that is in from Randy. Randy wants to know how he can actually access the On the Move course. And I've actually seen there are some people just wondering what the link is. So that link is actually in your GoToWebinar chat box. You can access that link right in there and go straight to the Market page for On the Move and sign up right on that link. Okay, so to get to those questions, we have a question here from Chrissy, and Chrissy asked, how do you get that market profile on your charts? Which indicator do you use?
Awesome. That's a really, really great point. It's actually if you use Thinkorswim, it's very easy to do, and if you use Thinkorswim and you're in the course, there's a walkthrough of doing it. But again, it's under the volume profile studies, because this is something that we kind of walk through in the course itself. I don't want to get into it too much, but if you check out the studies box, go to edit studies and you type in volume profile, you're going to be able to get that. If you don't use Thinkorswim, there are a couple other good sites. Some are, some you have to pay for, some you don't. Sierra Charts, I used to use that when I traded futures back in 2010, 2011. That was fantastic. That's a very good one. I am trying to remember. I believe it's TC2000. That's another charting package that one of the students actually recommended. Says he really enjoys that. And again, I'm not sure if you have to pay for that. I wasn't familiar with it. He enjoys it a lot, and says it's very comparative to what Thinkorswim has.
Cool. Next question is from Chase, and Chase asked, so you mentioned tape reading. Did you touch on that in the On the Move course?
That's an awesome question. We will very, very, very briefly touch on it. We won't teach it. The advanced course, the 12-day course that Lucci teaches, which is live trading, or not live trading, but a live session that he, 8 to 9:30 from Mondays to Wednesdays. That's coming up too. That's I don't know when that class is upcoming, but the July class is starting to wrap up. So keep your eyes peeled on for when that information comes up if you are interested in tape reading. But we try to relate it as much as possible. We try to integrate it at least as much as possible into the course itself. When we're going over things like reviewing these multi-day charts, multi-day charts that have this volume profile study pushed over it. When we take a look at this, it's pretty simple to see where the volume was. But if you took a look intraday, sometimes it gets a little blocky. If you wanted to check it out, we'll look at today's. What actually happened within this 169.20 to 168.70 range? It's just a big block. So it's very helpful from a multi-day standpoint, but sometimes, on days where it's a tighter range, it's not as helpful. We had a clue here this morning, which is very good, but, in between this chop, what are you getting? Where are the levels that we should really be paying attention to? You can see some of them, but this is where we kind of try to integrate, the tape reading and aspect into our course, but we don't touch on it as much as Lucci does. Lucci and Pete spend, I believe, 6 or 7 days of the 12-day course primarily on, the tape reading technique.
Yeah, that's kind of a nice shout out, Zach. So the purpose of this webinar is to give a little preview of what you see in On the Move. But for those who are interested in tape reading, I'll stick a link to that tape reading course with Lucci. And also you can give a call to MarketFi and speak to one of our concierges at 1-877-440-9464. That's all you'll hear about that. If you want to look more into it, check your chat box. You can see those links. I'll put the phone number there too. But thank you, Zach. The next question comes in from Gene. Gene wants to know, Young Buck, are those resistance and support lines hand-drawn, or are they a study?
Good question. So with regard to what we see here, if you were to take a look at the red line, the green line, the purple line, the two yellow lines, and this moving teal line, those are not hand-drawn. This is the the volume profile study that actually does it for you. If we were to go out and check out though, the daily chart, these lines are hand-drawn. I have been studying technical analysis for probably since 2008. Since I was a VTOT, and this is something that is just I've just been studying it for quite some time. Putting up these lines, charts, analyzing highs and lows, just looking at chart patterns, whether they be candle patterns. This is stuff that we actually don't teach in the On the Move trading course or any of the other Sanghvi courses. It's based primarily on sentiment, how we want to look at it. I use it for my own personal use, but this was something that we didn't want to really concentrate on as much with regard to getting a feel for how to use sentiment and how to use techniques that we teach in the course to get a feel for the price action going forward. But yes, these are hand drawn. Good question.
Thanks. We have some people writing in just to thank you for the presentation and to pass on their accolades, because I know for me watching this has been really, really helpful for me, and I know that it's been a really great preview of what you get with On the Move. And I've only seen bits and pieces of On the Move, and watching this webinar has made me, and I've seen some other people write in, really want to check it out more. So thank you, Zach.
Great. Thank you.
We still have more questions and keep them coming in. Let's see, the next question is from Gene. Gene wants to know, does Lucci use the volume histogram?
Lucci primarily uses tape. Lucci has been trading for many years and has developed a very good knack for reading the tape and utilizing just the time and sales in level 2. He does not use the volume histogram. He does not use that volume profile study. But he does understand the concept behind it, because it's literally just a visualization of what he's seeing on the tape. So as I continue to get better at reading the tape and use the market profile as a supplement, many people that are looking at swing trading, they will use that volume profile as their main way, and slowly integrate themselves and introduce themselves to what they're seeing on the time and sales and what they're seeing on the level 2. I use the level 2 a lot, and I use time and sales a lot as well. But shouldn't say that it's the only way to go about doing things, to understand the actual executions and transactions that are occurring on a day-to-day basis, and a minute-to-minute basis, and a second-to-second basis, within the stock market. It's a technique that takes a lot of time. I've heard many people refer to it as the 10,000 hour rule. 10,000 hours of screen time until you can actually get a full grasp of understanding how the tape relates to making good executions, making good trades. So again, it's a very extensive process. It does take a very long time to get a grasp for it, and because of that, we try to integrate the volume profile into the course as much as possible to get you prepared to potentially study and begin your move towards using solely time and sales at level 2.
Beautiful. Next question comes from Gus, and Gus says, I've only been trading options for a month now. I haven't quite gotten into the groove yet. Is On the Move the right level for me?
That is a phenomenal question, because you are a perfect person for the course that you are our target market. For the most part, we designed this course because we wanted that intermediate feel. And because of that, we were able to integrate these skills into the Sanghvi brand, which is great because we only had the 12th day at that point. And now that we have this is kind of our beginner stage. I need to understand in-depth basic of options and get my feet wet prior to getting my feet getting waist deep for the most part into the 12-day course. So yes, this is definitely where you would want to look if you're looking at just getting your feet wet, taking that beginner skill and sort of develop your own strategy, your own style based on what we go over in the course. And when you have that own style and you want to take your game to the next level, then that's the next spot is that 12th day. So good question, very good question. Yes. Good question, very good question. Yes.
Yeah, and make sure, Gus, if you're interested in signing up to access it, the easiest way to do so is via that link. In the latest link I just stuck in there in your GoToWebinar chat box. I think one of the links might have been erroneous, but if you look at the latest link in there, that is the right link to access On the Move, and that's in your GoToWebinar chat box. Now, Young Buck, we got a question from AIM, and AIM is wondering, do you incorporate Dow's theory into your trading?
This is a very good question. The answer is no, but I was asked a question by a student last night that said, and I'm going to make a really good example here, that asked, do you use 10Qs or 10Ks to, make a trade? And I said, no, I don't. I read them because I find them interesting. I am an academic person. I enjoy reading that kind of stuff. I enjoy the overall health of the company. But with regard to different theories, even Elliott Wave, I won't use, but regarding Dow theory or any other theory, I enjoy them. I think they're interesting. Do I use them to trade? No, I don't. But I do think they're interesting, and I'm not saying that it couldn't be used to make proper execution on trades, or it couldn't be used to make good decisions when you're actually sitting down at your desk looking to get into a stock or get in to an option, or even utilize it to trade other products like futures and forex. But for me, it's not something that I use. For Lucci, it's not something that he uses. I do find them interesting just because I enjoy learning new things. But with regard to incorporating into my own trading, I do not. No. Good question though.
Awesome, young buck. And do you have time for one last question?
I would love to take one last question. And guys, if you do have any other questions, we'll collect it and we'll look over the questions that we really think should be noted, which should be most of them. We'll stick it in an email or a blog post, and we'll be able to get those out to you.
This question is coming in from Samson. Thank you for the question, Samson. And you are asking, Samson, tomorrow is, or I guess you said tomorrow, but it's Friday. Friday
Yep.
is options expiration Friday. Do you hold on to options through expiration date, or do you dump them earlier?
Another really good question. Depends on your expiration. So if you have, if you're trading the August monthlies, no. My answer would be no. Primarily because most of what I do is out of the money trading with regard to options. So I'm what they would refer to as someone who's speculative, looking for price direction movement. With regard to people that trade in the money options, you could, again, it would be actually, you could get executed. Then you could actually get however many shares you could have at that price. With regard to what I do with that, speculative mentality, looking for out of the money trades. Even if it does get, in the money, so let's say Citigroup by Friday, which I don't condone, but if I were to be in the 51 strike puts, going into Friday, and Citigroup, let's say on Friday at 3.55 is trading at $50.25, I would still probably dump that, just because I don't want to hold the shares over the weekend. I have no interest in getting assigned. I don't want that. I just want to take my profit from the actual option trade itself and walk away. It allows me to sleep better over the weekend. It allows me to enjoy my weekend a little bit more. But again, if you were to ask the same question, and I was in, the following week's weeklies. So the weekly, August chain, I guess that would be the third week of August, third or fourth week, I can't remember. So the fourth week of August, whatever it may be. If I were trading, the back weekly, so the options that expire next Friday, I would hold those into the weekend. Yes, to answer your question, just because they've been, if I'm positioned well in it, if I am close to being in the money, if I am up a considerable amount, and I feel as though the stock could keep going up, keep going down, whatever my bias is, whether I'm in calls or puts, I will hold that over the weekend. I don't like to do it. I have to be in a really good position in order to do it. But normally my swings are going to be anywhere from 2 to 5 days. So I'll hold it for a week, and like I said, I have to be in a pretty good spot in the position itself, the trade itself, to actually hold that over the weekend. But with regard to options expiration, if I'm trading the option that's expiring on that Friday, no. The answer is no.
Thank you, Zach. And that about wraps it up for this presentation. So thank you so much for joining us. Again, that is the young buck, Zach Musso of the Sanghvi Hedge Fund Options Trading Group. And just one last time, I want to encourage everyone to check out the On the Move
options trading course. It is the perfect course for you if you are looking to integrate options trading into your busy life. If you don't necessarily have time to be full-time in front of your computer screen trading but still want to profit from options trading, or if you want to perhaps just start getting started as you build up your seriousness and your level of sophistication as an options trader. For $150, it's a very affordable price. It's a resource that is tremendous as far as catching you up to speed with what you need to know to improve your options trading, and ultimately it's a resource that's available to you. It's at an affordable price, so my challenge to you is be resourceful enough to take advantage of the resources that are at your disposal. This is an incredible resource. There are hours and hours of video content. You have quizzes to make sure that you're being kept honest and you're actually retaining and studying the material, and you can go back to answer any questions that maybe you don't get the first time. And of course, most importantly, you have access to Young Buck and the Sanghvi team with any of your questions, so that you have the mentorship and the teaching of some of the best options traders in the world. So make sure you check that out. That's the On the Move Options Trading Course by Sanghvi. We have here with us Young Buck. And Young Buck, do you have any parting words for us this evening, this afternoon?
Guys, I appreciate you coming out after the close. Enjoy the rest of your week. Be careful into options expiration. Time decay is a mother. But enjoy your weekend. Enjoy the rest of your week, and check the course out.
All right. Thank you, Young Buck, and thank you everyone for attending. Have a great evening. Trade happy, trade safe.